2, which is the crypto total market cap excluding Bitcoin on the daily chart. You know, Trump made this announcement, and anytime Trump speaks, people listen. The markets dropped 12%. And I talked about this in my previous video, and this is exactly what I said. Forming higher lows until inevitably we broke out at the tail end of October in 2023. And so in my opinion, I think that's what's coming for the market for Bitcoin. I think this rally may be a failed rally and we'll come back down for a double bottom, which could be a higher low. But I think we're just going to work our way through this range right here, inevitably break out for a trend reversal to the upside to form new highs for Bitcoin leading into Q3 and Q4 of this year. It's just going to take some time to play out. And sure enough, that is exactly what we're seeing with this failed rally pulling back for currently a higher low right now, down 12% since that tariff announcement was made. And so the real question is that people want to know is, do we continue lower for a lower low than the 11th of March? Because we have been in this downtrend since the 6th of December. And I'm going to explain exactly what it will take to get out of this downtrend that I believe is coming towards the end of this year. So for the next few months, we are in for a jam-packed roller coaster in the crypto market. And although things have looked pretty bleak and absolutely disgusting since the 8th of December, I mean, people that bought in the beginning of December are down 40% on their entire portfolio, whereas people that bought early that have been subscribed to the channel since 2022, 2023 are up on their portfolio that have been holding for a long period of time. And so everyone wants to know on the macro, when is the best time to sell? And on the micro, people want to know, is now a good time to enter the market, or is now a good time to sell out of your portfolio? So we just have to look at the data. We have to look at the facts. So on the daily chart right here on the stochastic RSI, we can see that the D line is at 13, the K line is at 0.55. Now we haven't experienced a bullish cross yet below 20. We are still in a downtrend right now. And so what I would like to see, and I'll give you an example by putting up these vertical lines each time we've experienced a bullish cross below 20 on the daily stochastic RSI and what that has looked like on the price chart. Because there are bullish crosses that do take place below 20 that could be potential fake outs as well too. So you have to be prepared for that. Because in this downtrend thus far, there has been 1, 2, 3, 4, 5, 6 bullish crosses below 20 on the daily stochastic RSI, and a few of them have been massive bull traps. And so let's just go through them one by one as we progress through this video. The most recent one happening here on the 1st of March. This is when the total altcoin industry was at $1.06 trillion. Trump announced the strategic crypto reserve with XRP, Solana, ADA, and those three projects, actually Ethereum, not ADA, but eventually ADA might be included, we'll see. But those three projects are the reasons why Total 2 pumped up to $1.24 trillion and rallied really fast, upwards of 16%. And so that led to a massive pump of the market. The time before then, we saw this bullish cross on the 8th of February. The market pumped from roughly 1.17 trillion upwards of 1.28 trillion, and then got rejected from this descending resistance right here. So if I were to just draw this descending resistance, you guys can see we're just putting in lower highs. And so it was a failed recovery rally. And so we haven't seen a trend reversal yet. And we're at a very pivotal point right now in the markets because we need to clear 1.1 trillion, and inevitably we need to clear this zone right here of resistance upwards of 1.2 to 1.3 trillion dollars. So until both of these zones are cleared, then the bears are going to remain in control. Now, if we look back here to a major fake out, right here from the 29th of January to the 30th of January, we saw a bullish cross all the way down here. And for those of you that don't know what a bullish cross is, it's when the K line in blue crosses above the D line in orange. And the further below 20 that this happens, the stronger the reversal signal. So this happened at 12, but this was a massive fake out because even though it confirmed the bullish cross by both lines passing above 20, we reversed right back to the downside and formed a bearish cross right here at 30. And so yes, the markets did pump in the short term from about $1.35 trillion all the way up here to 1.47, pumping about 9%. It was just a failed rally, and the markets fell off of a shelf, dropping massively. This is actually one of the biggest crashes in a 3-day period in history for crypto. It dropped 31% in 3 days. That destroyed a lot of investors and is the reason why this zone right here at about $1.28 trillion is the new level that the markets need to clear, because it was a very strong zone of support ever since the 26th of November. Because you can see right here, even right here on the 20th of December, on the 13th of January, these massive wicks on the bottom of these candles showing strong buy side demand where the bulls were aggressively defending this zone. And so when we broke below it, look at this massive wick to the downside. The bears pushed the market cap of the whole entire industry down to $1 trillion, and then the bulls bought it back up. But now we are facing critical resistance at this exact same zone right here on the 14th of February, the 17th of February, the 21st of February. The bears could not reclaim this support, so now it acts as resistance. And as you can see, even Trump's news for the Strategic Crypto Reserve was met with heavy selling into this zone right here. So this is going to be a very important zone to watch moving forward in the future, and the most important resistance that needs to be cleared for a major trend reversal moving forward. But looking back to the previous bullish cross below 20, on the 11th of January, we saw the markets go from 1.35, rallied only 2 to 3% to 1.38, and then drop very, very quickly about 9% into this zone of support before rebounding out of here and rallying up to $1.55 trillion. So this was about to be a major fake out. As you guys can see right here, we saw the bullish cross and then an attempted bearish cross right at 20, but the bulls pushed the price all the way up here. And so this is why it's important to look for bearish crosses above 80 and bullish crosses below 20, because on the macro, whenever you're buying into the markets on bullish crosses, on macro timeframes, like right now we're on the daily, we'll go into the weekly in a little bit, but that's a very, very good long-term strategy. Where a lot of people get wrecked in crypto is when they buy bearish crosses above 80 when all the momentum has already been seen in the market and we see reversals above 80. For example, right here, look at this bearish cross on the 5th of January. That's when the market cap dropped from 1.5 trillion all the way down here to $1.25 trillion. And so you can do this for yourself. Just go on TradingView, click on indicators, and then add in the stochastic RSI. You can adjust the time frame for yourself, and you can add in these vertical lines to see. One of the previous bullish crosses below 20 was on the 22nd of December. The market cap went from 1.28 trillion and bounced up to $1.4 trillion. So this is good for spotting short-term opportunities and entry points in the market, even with fake outs if you're planning on trading over the course of a couple days, because this was another major fake out and a bull trap on the 12th of December. We experienced a bullish cross. Both the K line and the D line passed above 20, and then just bearish cross immediately back to the downside. So that was when the market cap of the industry bounced from like 1.36 trillion all the way up to $1.6 trillion and then reversed for a lower low. So right now, what I'm waiting and I'm watching for on the chart is for a bullish cross to happen. And we're not seeing that yet. The K line is at 0, the D line is at 13. So I think the D line is going to come down a little bit further, and then we're going to see it intersect the K line, and we'll see where the price action is on the chart at that exact same time. So I would just expect us to chop within this range for a little bit right here while the stochastic RSI completely resets, and then the K line comes in contact with the D line. Then once we experienced a bullish cross, in my opinion, I think the price is going to bounce to the upside. And the real question is if this is going to be a fake out or not for the price to make a lower low and to fall off the shelf based on this tariff news here. So make sure you guys subscribe to the channel, because we're going to be covering the news every single day. In the rest of this video, I'm going to share with you some important details that you need to know. Because if the next bullish cross below 20 for the stochastic RSI on the daily isn't a fake out, and we see the K line rocket above the D line and the stochastic RSI make an aggressive recovery back above 50 and eventually above 80, then that could be the major trend reversal signal that we need in the markets to come back up to back test the $1.27 to $1.3 trillion zone of resistance that I just talked about. And like I said in previous videos, it might take time to play out, similar to what happened here between August of 2024 until the 6th of November. I don't think this is going to happen right away. I think we're going to consolidate within this range for a while before we come back up to this zone of resistance for a few different reasons, because it's officially reciprocal tariff week. Pay close attention. I'll explain what this means. I thought this was a great post from the Kobisi letter, because Trump has called Wednesday Liberation Day with 20% tariffs coming on up to 25 plus countries. This will impact $1.5 trillion worth of imports by the end of April. So here's what you need to know. Trump has been discussing Liberation Day for weeks, where many traders believe that April 2nd will be the biggest escalation of the trade war in history.
You know, we've been very nice to a lot of countries for a long time. But I call it Liberation Day. April 2nd is Liberation Day. But today, as you know, we did something with respect to Venezuela. You heard about that. And that will be quite important. We'll be announcing some additional tariffs over the next few days, having to do with automobiles, cars, and having also to do a little bit with lumber down the road.
So currently live U.S. tariffs include 25% on all steel and aluminum, 25% on most Canadian goods, 10% on energy, 25% on all Mexican goods, and 20% on many Chinese goods. The 25% automobile tariff and 25% on countries purchasing Venezuelan oil will go live this week. On top of this, Canada has already announced reciprocal tariffs of $21 billion on U.S. goods. China has placed 10 to 15% tariffs on U.S. agricultural products, and the European Union has vowed retaliation tariffs as well. Mexico's president has already vowed to announce counter tariffs on April 3rd. So the result will be reciprocal tariffs on these reciprocal tariffs, and one of the largest trade wars in history. The average U.S. tariff rate is already up to 8% with tariffs announced this year, the highest since 1970. And I know you guys are tired of hearing the word tariffs, but it's important that you understand exactly what's going on. Because by the end of April, they're expected that 1946 high to be broken on the average U.S. tariff rate. Take a look at the Economy Policy Uncertainty Index. Policy uncertainty is currently above just about any crisis in modern U.S. history. We are seeing 80% higher uncertainty levels than the 2008 subprime mortgage crash. As a result, market swings are widening and we expect an extremely volatile week. The markets don't like uncertainty, and with Trump being as aggressive as he is on tariff, this is creating the most uncertainty that we've ever seen. Also heading into this week, gold funds have seen unprecedented inflows. So this is very good for people who hold gold because gold is currently making an all-time high right now. Gold ETFs has seen a massive $12 billion net inflows over the last 2 months. While the S&P 500 is down 5% year to date, gold prices are up 17%. So this does not happen in a normal economy. People run to gold when there's massive uncertainty. And also, Trump has threatened to bomb Iran if they not make a nuclear deal. He also said there will be a secondary tariff on Iran and potentially 25 to 50% tariffs on Russian oil. So Trump is just stirring the pot right now. And sure, in the long term, this could work, but in the short term, everyone's going to freak out because this is so different than anything that has happened over the past few decades. And Barclays believes that April 2nd reciprocal tariffs imposed by Trump will impact as many as 25 countries. U.S. sectors likely affected include automobile, pharma, semiconductors. And on Friday, Trump said that pharmaceutical tariffs are coming soon in the latest escalation. So as a result of this volatility, U.S. consumer sentiment has fallen to 2008 levels. Consumer sentiment is down 20 points over the last month to 57, basically meaning that U.S. consumers and retail investors have never been this pessimistic outside of a crisis or a recession. An economic slowdown has clearly begun, and it's clear as day that Trump has annihilated crypto investors this past week and since late 2024 for people who invested near Christmas time. So we're in for a big week, guys. Subscribe to the channel. We're going to cover all of this because on Wednesday, just a couple days from now, the External Revenue Service will also be established. And the Trump administration aims to generate $600 billion of tariff revenue per year. This is effectively a new tax going live as we speak. So given that tariffs result in prices increasing, being passed on to consumers like us, in some capacity, tariffs will also fuel inflation. Because in Trump's trade war, PCE prices across 9 impacted categories rose 4%, and the non-tariff impacted categories fell 2%. So inflation is expected to run hot in Q2 of 2025, which a lot of people think is negative for the crypto market. In contrary, last bull run, high inflation is directly correlated with that entire bull run. And when inflation came down, that's when we were in a bear market. So look back here to March of 2020. Inflation dropped from 2.3% in February to 1.5% in March, and then to 0.3% in April of 2020, and then to 0.1% by May of 2020. And if we look at the chart, when inflation was all the way down at 0.3% in May of 2020, that was right after COVID, and we were breaking out from these lows before starting that aggressive rally in the crypto market. So could we see inflation spike up going into Q2 of this year while we see a massive recovery in the crypto market? Because right now, CPI inflation is at about 1.94, it shows on this specific indicator, whereas United States inflation rate right here shows 2.8%, because between March of 2021 until June of 2022, when inflation topped out at 9.1, it was actually much higher than that. We saw the crypto market top out before inflation did. And then when inflation started coming down, we were already in a bear market at that point. So Trump obviously wants Jerome Powell to lower interest rates because he said it himself that high interest rates, no one gets wealthy when there's high interest rates, specifically the effective federal funds rate. But in order to drop interest rates, the Fed wants to see inflation come down to their 2% target. So it's a catch-22 here. The Fed's in a pickle right now because with inflation at 2.8% and expectations for inflation to come in hotter than expected for Q2 of this year, could that mean stagflation, the Fed keeping the effective federal funds rate higher for longer?